Cheers. Welcome to the week that was.
Cheers.
This week we're covering August 4 to August 8. Are we cheersing or what? Just throwing your wine around.
What was that?
I don't know. It's been a week, all right?
Doing these on Friday, it's great. We get to drink.
Yeah, and then we go for a meal afterwards and anyway.
And blow the budget.
Blow everything. Look, it's Aussie economy is still going pretty good. I mean, gear's gone up a bit.
Overall,
week.
great week.
Yeah. Markets are very fat and happy at the moment.
Well, one's looking pretty.
Yeah. They're all doing quite well. It's just I'm starting to get more and more concerned. I just get a real vibe. You know, like we wrote in the last newsletter about valuation and investor sentiment. Most valuations like Cape and stuff are really good for the long term, but they're not much good for the next 10 weeks, let alone, 10 months.
Yeah, well, it's anything Trump says goes anyway.
Well, yeah, that's part of the problem. And we've been talking about that volatility issue because, the problem is Trump says something and then the market responds. The thing that actually concerns me is Trump is now saying stuff and the market's just going, yeah, all right, so that's where I think that. Do you know what I mean?
Desensitized.
Exactly.
Trump's going to just do crazy things.
Yeah, it doesn't matter. Market's cool. I mean, there's
priced in.
Yeah.
It's like wars.
Yeah.
Yeah,
I think many.
They're serious, but they're everywhere. People are like, oh yeah.
Well, now it's
video.
funny you say that, Tom. Go and have a look at the return of the Israeli ETF. Right, so they're in a war.
Opportunity, huh?
Right. Well, no.
You've been looking?
It was an opportunity. I think it's up like you can pull it up, Tom, please. It's at like 30% or 35% or something. Wow. Now, admittedly, that's I think in US dollars, but it's still substantial.
Except
what's
year
up?
to date up 17.
Yeah, so I mean, the joint's in a war and it's up 20%. And it's like, oh yeah, cool.
I think people are that skeptical now. They're looking for any sign of bad news and buying because it's so accessible to everyone.
Yeah, I think we've got, to the point where we're having a little bit of a melt up, and we're in the period where there's too many people saying this won't stop. There doesn't seem to be caution about anything.
No.
Right? Bitcoin's going, meme stocks are going, the markets are going, residential property's going. It's just all humming along. And that, to me, as I sort of often say, if the Cape was 10, I'd be going, cool, we're going to really swing up. But at a Cape of 39, even Australia's Cape now is about 22 or 23. So, that's getting 30% away from the long-term average. So we're at an all-time high as well. And like you said, well one's done really well. It's like, yeah, because the market's starting to move a little bit.
Well, it's gone nowhere for so long, the Aussie market.
Yeah, that's true. But yeah, everybody just, as I say, everybody just seems to be, just buy stuff and it'll go up. And that's where I sort of think, you've got to be a little bit careful.
Do you think we're benefiting at the minute with, Australia's exports in coal and iron ore and gold and all that kind of stuff? The world seems to be turning to a lot of that. Yeah,
the trade surplus I think was $5 billion or something this month. So that's all good, but the global growth is still not that large, and the more I keep looking at the trade war, the more I realise that we are now on a path that is, I would consider, irreversible. And the path is we're separating, right? And that's eventually going to reduce economic growth, and eventually people are going to go, oh, okay, these things are not worth that much money, right? We're not there yet, but at some point, there's like an absolute shit ton of money going into investment in AI stuff. But some of the AI stuff now is coming out going, it's not that good, right?
It's like the internet before the .com.
Well, yeah, but what happens is people get expectations that outrun what's actually capable, right? So I'm not arguing AI is a dud, But what I'm saying is people are sort of getting a little bit carried away with it. And it's a bit like, whoa, hang on, let's just bring, we've got to keep our feet on the floor, on the ground here. And there's a lot of people, particularly in America, right? The Americans just love pumping and hyping and, they just do that stuff. And I just keep looking at it, and they're talking about American exceptionalism and, how the markets are great and all this stuff. And when you look at it, you just sort of go, nah, it just looks like the stock market's gone crazy.
Well, I mean, the growth in America, economic growth in America has been okay, and they're investing heavily into their own businesses right now. I mean, $100 billion into Apple recently, yesterday or the day before, whenever that was.
Yeah.
That's just one example of how they're investing. Yes, the stock market's high, which is a different conversation altogether than the economy, but I can't really see the economy slowing right now.
Well, all this, surely bringing manufacturing back on shore, that's a net positive for productivity, but it's going to take a little while for
I think
things to fall into place.
I think what we're seeing is the transition away from less consumption, which is about 70 to 80% of the US economy, into investment. So, what you've said there, Tom, is instead of spending lots of money going to coffee shops and buying crap from Temu in China, what they're doing is now spending money on building data centers for AI, right? You're still spending money, but you're just spending it in different areas. And so that's why I say when they go, oh my God, there's a lot of an increase in bankruptcies. It's like, okay, tell me what the businesses are. Because if you said to me, oh, Steve, 25 coffee shops have gone broke, it's like, okay, well, we got plenty of coffee shops. If you said to me, oh, an AI data center's collapsed, it'd be like, okay, man, geez, that's a problem.
Or they probably employ 50,000 people or something.
Yeah. And the multiplier effect is really large. Yeah. So that's why I say that we're in a transition period, and that's what makes it a bit hard, for investing, because you've just got to be. That's why I say you've got to have that macro framework to fit it into, because the old style of going, you just buy good companies and hold them, that's not, it sort of sounds really good, right? Everyone says the same thing. Oh, you just buy quality. And it's like, okay, fine.
Yeah.
But, quality for the last paradigm is not quality for the next paradigm.
Yeah. And also, what price are you paying? Exactly.
And that's what's happening. At the moment, there's not, no one's paying attention to the price. I went through the ASX top 20 yesterday, and I thought I'll just look at the PEs. Bit of a, rough barometer, but I thought I'll just look at the PEs of the top 20, right? Because they have a large share of the ASX. And
30 plus?
Well, some of them are pretty expensive.
You've got the banks, Telstra.
Yeah, banks, Telstra. Commonwealth Bank, I think, is now at 30. And for an old established company, it should be around 15. But, they're riding the mortgage boom.
Has Telstra moved? I stopped looking at it because for years it didn't do anything.
Well, Telstra's PE now, I think, is up around 20. I think maybe even a little bit higher. I remember going, actually, that's.
Last time I checked, they were at like $2.90 or something.
It's like $5.
Is it 5 or 4?
$4.97.
Oh, really? Okay.
Go on, Telstra.
So
probably pays a dividend of about 89%.
What's that?
Probably pays a dividend of about 89%.
Yeah. But the dividend yields are falling.
Yeah.
Right. And the reason why is because the price is getting ahead of it. So even I think the ASX dividend now is about 3.5, market dividend. But you can still get 4 in bonds and stuff like that. So again, you've got to look at that and go, okay, you're taking a bit of risk. But one thing that is really cheap is resources, right? Even BHP and Rio, you have a look at them. They're, I think Rio's on 9 or BHP's on 9 or something. Wow. So they're quite cheap. But then there's others like WiseTech is on, 66.
Yeah, all the tech companies.
You know, so
Yeah, I mean, you got to look at the. I mean, it's easy to say this, and there's arguments against it, but you got to look at the tech companies and go, okay, like a PE of 60. When you compare that to something like Tesla with a PE of like
160.
Is it inflated for a reason? Like, is the average actually 20 anymore?
Right.
Well, I haven't seen any Australian companies with a PE even close to some of the US.
No. Well, they don't get the inflows.
They're in the hundreds.
Yeah, but see, Australia's a little unique in the sense that we're a wealthy country, but we've got a small population and we've just basically got heaps of oligopolies and duopolies, right? So we got, you look at it, you got realestate.com and Domain, right? They basically govern that market. You got Woolies and Coles, and you got a dash of Aldi. You got the four major banks and Macquarie, right? You got JB Hi-Fi, Harvey Norman, and you got a bit of Kogan, right? So when you never look at an Australian industry and go, wow, look at that, 15 companies. It's dominated by 3 or 4 or even 2 companies. And so from that point of view, it's good in a way, right? Because it's generally steady returns and that sort of stuff. But it's not great for dynamism, right? There's not a lot of innovation going on in this joint, right? And that's because those big people are just sitting there going, yeah, righto. Whoever gets innovative, we'll just buy them out.
We don't really have the population for it either.
Well, no, not necessarily. The problem is we've let big companies buy out any of the potential competitors, right? This is what they got going on in the US, right? The big company, Meta just buys out anybody that looks like it's a threat, right? Or they go in and just go, okay, that's a really great idea. You're thinking, oh, yeah, I'll probably get, 500 million. Meta go, we'll give you for, 4 billion. They go, okay, great, fine. Right. Well, who's not going to sell out?
There was a bloke this week, or it might not be this week, but the story came out this week where he was like, he made his own AI company that was leading in whatever, like insert whatever it was. And Zuckerberg's right-hand man offered him 125 mil to basically work for Meta. And he turned it down, wanted to go on his own path. Zuckerberg called him into his mansion or went for a coffee or whatever and just doubled it. I'll give you 250 mil. Come work for me. He's like, all right, cool.
Yeah.
Like,
That's what I mean.
Why wouldn't you?
That's what I mean. Those companies have got a lot of cash, and they've got a lot of cash because they're dominant, right? They're dominant. But the question is, they can be dominant, but is the price, as Tom said before, well, okay, but are you paying for it because you're not really getting it undervalued, even though there's lots of arguments about that.
Yeah, there was one as well. I remember hearing. I've just checked. They offered someone 1.25 billion over 4 years. An AI guy.
Yeah, to join the AI club.
Yeah,
they've done that. Yeah, they did that with about 5 or 6 of them. They've all gone in and said, "We'll give you 200 million salary."
The Avengers of AI.
How would you even want to do the work?
Just a bunch of nerds.
Oh, well, you do. But when you get, when you get in there, it's really competitive, right?
They love it.
Yeah, you're working 18 hours a day, and all that stuff because it's just what drives you, right? And if you pay someone 250 million bucks, you expect them to turn up more than 9 to 5, right?
Yeah, that's
well, this is an interesting one. The next topic for me. So the S&P 500 10 biggest companies. There's arguments for. I mean, if you remove those, the actual CAPE or PE or whatever of the rest of the 500 companies, the 490 companies, is reasonable, which is what people are saying. Oh, if you just these are going to catch up and push the market even higher. If I'm making sense.
Yep. Yeah.
Yeah. Or if the bubble bursts with those ones,
they drag everybody lower. That's it.
Yeah. So it's worth just maybe talking about what that looks like because a lot of these people are looking at the S&P and going, "You take that out, and it's fine."
Yeah, I think when you get if you just ignore that little bit, it'll look good. I think the thing is going, okay, but that's not how.
Yeah.
If you just exclude the cancer, actually you're quite healthy, and it's like, yeah, okay, yeah, that's one way of looking at it.
When you put it that way,
Yeah.
But you know what I mean. So it's a bit like, yeah, okay, that doesn't really work. You know, because the other thing I'm noticing too, which I'm really concerned about, is the way people are legitimising expensive markets. And they do this every single time, right? They invent new metrics to look at, right? So in the dot-com bubble, it was all about eyeballs and clicks, right? My PE ratio is 146. Doesn't matter. You've got like heaps of clicks. And it's like, okay, but do those clicks actually mean any money? It's like, that's not what it's about, bro. It's about clicks. And then, of course, they go bankrupt overnight, right? And I'm seeing that stuff again. And that's why I say, and we're going to talk about this further on, all of those same behaviours are coming back again, right? And as I said on the week that was the video this morning, I thought to myself, during the week, I thought, I've got to go back and read Robert Schiller, right? Irrational Exuberance. So I went back and selected chapter 6 because it's called New Era Thinking, right? And Schiller talks about the mentality and the psychology when you get the new era, right? So AI is a new era, right? We're talking about EVs and robotics and all this sort of stuff. So it always centres around technology. Right, and this is what you get,
like the shiny new object.
Yes. Well, what it says, Jacob, is the future will be brighter.
Yep.
Right.
What are the gold nuggets?
Yep. That's where we're going to talk about it later on. But one of the it's really important because, as I say, if you understand market cycles, once you, like me, if you've been in the markets for a long time, you get to go, hang on a second, I think I've seen this before. Right. And once you revisit history, you go, yeah, I've seen this before. And that's what I'm seeing more and more of. It's what happens is they sort of say, when the last bear is killed, that's when the market crashes, right? When the last bear goes, yeah, stuff it, right? It's all good, it's a new era, and then the market crashes, right? And it just seems to me that there's not many bears around.
Just three in this
Just
room.
three of us.
Three in the room, yeah.
There's three bears.
And I got my doubts about you blokes.
three grizzlies, and we're all in on Bitcoin.
Yeah. No, two of us are in on Bitcoin, bro.
Oh, you didn't know. We use the company account.
Yeah.
We've got you one.
Yeah.
We're 10x long.
We're in Tether or whatever that garbage is. Don't start. It's only early. Righto.
Aussie economy.
Aussie
House
economy.
prices are 14 times income.
Still very high.
14 times the average income or 2 times Tom's income.
What?
Something like that.
Where has this come from?
This is the new joke.
I don't like it.
It's the new joke. Deal with it.
If it was true, I'd
14,
like it.
14 times income is absolutely insane. It's
It is.
absolutely nuts.
You put a chart up on Instagram, I think, or social a few days ago, where in 100 years ago it was 3 times, and then 1975 was 4 times,
Yep.
and it's just kind of gone.
Yep.
I reckon bring back 4.5 times.
I'll be happy with that.
Well,
It'll happen after I
It's
buy.
too size to it, price
well,
and income.
but you see, it may well do, Tom, but it might take 20 years. Right? This is the thing people don't get with property, is that it may not sink, but it may not go anywhere for 10 or 15 years. And then when you go, oh, we had that property for 20 years, calculate it and go, actually, we didn't make any money.
Or
Right,
when minimum wage is 250 grand a year.
Yeah, which ain't going to happen.
Yeah.
Right.
Well, might be pull a Zimbabwe.
Well,
feel like Greece,
Well,
circa
Got a
2008.
$1 billion note.
we're talking about debasement later on too. So, but anyway,
Looking
there
forward
won't
to
be any new taxes according to Albo.
He's a good bloke, isn't he?
He's well,
You're
he's
going to get us cancelled saying that kind of stuff.
he's
mate.
he's a bit I think he's a bit spineless, to be
He
honest.
is, yeah, he's
But
a bit
I
of a
will
wet
say,
blanket.
what happens in politics is, because Albo had such a big win, what people do is go, oh, well, you've got heaps of political capital, so you should use it, right, to do things where, like housing, right? Oh, well, you should, do whatever it is to fix housing. You should do whatever it is to fix the cost of living. But what people don't understand is that as a political party, what you do is you go to the electorate with a policy platform, right? And, I did this when I was a ministerial advisor. You basically have a booklet that says, in my case, here's the 85 things we're going to do for the environment, right? And it would be, we're going to fund this and we're going to do that and we're going to continue this. You do that across every department, and what you don't do is go, oh yeah, now we got a big majority. Yeah, that was all bullshit. Now we're going to do this, right? Well, you don't. Because if 80 people out of 100, or in Albo's case, 65 out of 100 said, we like what you're going to do, it's really dumb if you go, actually, no, now we're going to do this stuff, right? Because just because you get a big margin doesn't mean you should, like the people didn't go, oh yeah, we'll give you a big margin so you can do the stuff that you haven't said you'd do.
Yeah, it's not a dictatorship.
Well, not dictatorship, but just people saying, well, hang on, I voted for you to do what you said you'd do, not the stuff where you said, oh, well, if we get a really big margin, we're going to do this. It's like, okay, well, that's not the way politics works. Now, they can be a little braver, and generally they will, they might push the envelope on one or two big issues, right? But Albo's fairly conservative. So it's, like I had in the week that was, I had 2 pictures in there with the union saying, you need to do negative gearing reform and stuff. And then I had another one in the Productivity Commission saying, you need to raise the GST and do this stuff. And the argument was, okay, we're going to have tax reform. Well, then Albo came out yesterday, and as I deleted those pictures.
We're not doing that.
And just went no new taxes before the election. So the one thing you want to do in politics too is you want to keep control of the narrative.
Yeah.
Right? It's really critical. If you lose control of the narrative, the tail starts wagging the dog, and it gets away from you. So that's why Albo pretty quickly has gone no new taxes. Now, he said no new taxes. He didn't say
not increasing the old ones.
He didn't say, listen, we're going to do a bit of, we're going to do a bit of Houdini, cup magic here.
Didn't say I'm not getting rid of tax breaks.
Well, yes, that's exactly right. That's exactly right. So, again, it's always, in the wording, right? In the wording.
Well, the 50% capital gains tax has been on the record a bit.
Yeah, but again, when you've got so many people who are involved, you've got 2.3 million landlords, you've got heaps of the blue rent set with franking credit shares and, selling things and capital gains and all that stuff. It's hard to say, listen, you guys, we've got to cut your income. I mean, hands up, how many people like doing that? Well, hardly anybody.
Yeah.
And that's what makes it hard. That's why a lot of the time you need a crisis where you can then go, okay, we
have to do this.
Yeah, we have to do this, and sorry, but this is the way it's got to be, right?
Oh, there was a bunch of articles floating around, Jacob, where basically someone had proposed maybe increasing GST from 10 to 15%.
Yep.
And basically they went, look, this will benefit majority of low-income earners. Some middle and high-income earners will be affected slightly. This will enable them to put cash back in people's pockets. I think what it equated to on
was a lie.
Proposals was like $1 a day.
Yeah.
For low income. Yeah. And it's just like, what's like,
if $7
that's insulting.
Week, right?
That's probably an hour of whoever thought of the idea's time. Going
an hour, $7. That's like
like 365.
Yeah.
They just got to stop eating avocado toast and buying coffee.
Yeah, just get on with it, mate.
Yeah.
Well, I must say, just off tangent, I took my daughter to a coffee shop last week. $19 for 2 eggs on sourdough.
That's about the going rate of 2 eggs.
That is outrageous.
It's inflation.
It's not that dear, Tom. Like 15. I'll cop 15, right? But $19, right?
For everyone not watching the video, he's taking his jacket off. He's that angry.
And his
jacket's coming bloody off. Lights are frying me. That or the wine. But, I'm not kidding. A dozen eggs at the supermarket is $6. So that means I can buy 36 eggs for $18.
You must be buying caged.
Or I can go to the coffee shop and buy 2.
You're obviously buying caged.
Of course.
What
do you buy? Right, organic, range-free, bloody chooks in the backyard.
You got to pay for Bob to cook them up.
Chooks can at least take a step.
You got to pay for Bob to cook your eggs.
You guys are so politically correct.
I am paying $19 for a couple eggs, mate. That's you.
Yeah.
You're the one out there. How many coffees do you have a day?
Oh, well, a few.
Yeah, that's why I add
2,
that.
3.
And he doesn't have a coffee maker.
No.
He goes to the coffee shop.
Yeah, well, I've got to do research at the coffee shop, you guys. You should appreciate it. I'm
I
working
do.
hard there.
I actually do.
Fun's over. We're going to talk about currency debasement.
Oh, yeah, right.
It's a
Thanks,
common
Steve.
topic.
Everybody goes off to sleep now.
Yeah. No. Oh, most of these listeners are asking about it. That's why we're doing it. So, what is it?
What is it? Yeah. Okay. Righto. Here's the sort of short story. The argument is governments are debasing the currency, and the reason why is to inflate away the debt. Right now, I'm not going to explain that to you because it's awfully dry and boring. So, the old idea was, the old coins that you get, right? The 20-cent coin and the 10-cent coin. Right, the little grids on the outside?
Yes.
Do you know why they have those?
No.
Okay.
To count.
No, the reason why was because what they used to do was they would file the coin just ever so slightly smaller, and the coin had a gold content in it, right? So what they did was they put the grids on it so you couldn't file it off because you'd look at it and go, hang on, someone's taken the outside of it off and snag the gold, right? So that's the general idea. The idea was the government would say, okay, this 10-cent coin, just for argument's sake, right, it's got an ounce of silver in it. And then they go, okay, actually we're going to put a half an ounce of silver in it and fill the rest of it with lead, right? So in other words, it was debasing it. The argument is, in this context, what these people are saying is, the currency is now buying you less. You hear this a heap in America, right?
The dollar's worth less.
The dollar's worth 97 cents less than it was in, 1932.
Isn't that just increased supply?
Well, there's
Printing more?
yes, that's part of the argument is, Tom, that the debasement comes from increasing the supply, right? So you get a flood of money, you get too much money chasing too few goods, prices go up, and then you get inflation.
Yes.
Right? And then, as I say, Dorito corn chips are $4. They debase the currency. Dorito corn chips go to $4.40, but you're still getting the same amount of corn chips. So you look at it and go, well, hang on, now I'm paying more and I'm only getting the same thing, right? Which is a tragedy if you like Doritos corn chips.
Yeah.
Right? Now.
Or eggs.
Okay.
Or eggs, yeah.
Or China.
But this is why people are saying buy gold.
Yes, absolutely. Yes, because the argument is gold is an inflation hedge.
Yeah.
Right?
Or crypto.
And that's for another day. Yeah, no, stop it.
Digital gold.
Stop it. I was just going so well.
Oh, sorry.
I was just going so well.
I'll shut up. You
Right? Okay. So, here's here's the other two parts. God, you blokes bloody drink fast. Here's the other two parts. Now, I thought this was a really great example, generally because it was a personal story. Right? Now, when I was in 1983, I was promoted to sales in my company. Right?
Steve was 55 then.
Yeah, I was about 106. Actually, I was only 20.
Are you
so
sure
I'll
it
have
wasn't-
you guys know I was red hot salesman.
I was going to go the other way. I thought it was 4.
So what they said to me was, look, we're not going to give you any money. Come on, are you paying attention?
I am.
Right.
Someone just got me.
They said, we're not going to give you a pay rise, but we'll get you a company car. Right?
Yeah.
And I, me being 20 going, man, I've hit the big time. I've got a company car. So they bought me a Nissan Pulsar, right? So think of it as sort of like a Toyota Corolla, right? Hey, you could take what you can get,
Absolutely.
right? And it had air conditioning.
That's huge.
Right, and it was enormous. I remember the air conditioning was an extra $1,000, and I had to really push the and be like, oh come on guys, I can't get out being a salesman, looking all hot and sweaty, right? Yeah. So anyway, they went, yep, righto. Now it was $13,000 with aircon. Okay, so if you put in $13,000 in 1983, and say with inflation, i.e. debasement, how much would it be worth now, right? Now, in other words, to buy a new car now, equivalently in 1983, would be about $50,000, okay? Now, let's have a think about that. You can get a new Toyota Corolla, which is a hybrid, right? It's got air conditioning, power steering, windows, stereo system, a good motor, they run really fuel efficient, and it's about $35,000, right? 37.
Now you mean?
Yes.
Yeah.
So in other words, what you look at is say, yes, cars are more expensive, but they're a much better car.
Way more tech.
Right? They're safer, they've got better tech, they're more comfortable, they last longer, all of that sort of stuff. So when you hear the arguments about debasement, what you've got to do is say, yes, but productivity has countered that. Right? And so you can say inflation's at 3%, yes, but in manufacturing, productivity's been running at about 6%, right? That's why a lot of the manufactured goods, cars, are a lot cheaper, right? And they're being made in places now where they pay lower wages, right? Thailand and China. So that's why we've had an explosion in the West of lots of consumerism and stuff. Right? Because what we're doing is saying our dollar is actually buying us more because we're getting things made cheaply and the cars are better and they're increasing productivity. Right? So that's the one thing you don't hear about much. And basically what I'm saying, the bottom line is sort of like, listen, for most of us, life is getting better. Right.
Yeah.
And I can tell you, in my day, we didn't have air conditioning. Right. Only the rich people had swimming pools. Right. So it's a lot better now. Admittedly, we had a big family, but the hot water system would run out after, two of us had a bath because it was only really small. Right. There was all these things now. I mean, you look at the houses now, they've got ducted air conditioning. The materials are a lot better.
Well, on that, what about the debasement conversation seems to come around when people talk about housing. So houses they've become easier to build, quicker to build, better materials, cheaper materials, and arguably shitter. They're really crap out. New houses are crap is a common theme.
Well, yeah.
Well, how would you relate the currency debasement to that argument when house prices are 14 times income?
Okay. There's a difference there.
Good question, Joe.
Housing.
Great question.
Thank you.
Well done, mate.
And what about with
you can have a little bit of extra wine for that.
Just a tipple.
Again, reading Robert Schiller. Yeah, you blokes are doing all right. I've hardly finished my first glass. You blokes are knocking it off.
It's been a long way.
So Schiller said again, if you look at productivity of housing, the materials are better. They used to use. A bloke used to walk into a site with a bunch of nails and a hammer. Well, now they've got a nail gun, right? And it's like boom, 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 right? So they knock it off a lot quicker. You've got to separate that out from the 14 times income because that's more a function of the explosion in debt.
Right.
Right. So it's the argument would be saying, or it makes it a little bit difficult, but generally houses are comparatively the same price, if not cheaper. The explosion has been in the debt, which has pushed the house prices up.
So it's like if you're speculating on buying a Nissan Pulsar
yeah,
you'd be paying more, like in the second-hand market.
Yes.
In COVID, for example, you're
yes.
paying more for a car.
Exactly.
Okay, so it's more about
Exactly.
investor psychology than it is about
Exactly.
debasing currency.
It's not about the material costs. It's actually about the speculative element of it, where people are outbidding each other
Yeah.
to buy the house, and they're borrowing. Or if you're really wealthy, you're just using your cash and stuff, right? Or your collateral.
Understood.
That's what's going on. So I think he also asked about, does it impact company earnings or CAPE? A little bit. But it depends, again, on what the company is and are they, like I said about Doritos corn chips, right? What they've done is a lot of the food companies have said, well, the Doritos are $4 and it's a 300 gram pack, right? So what they do is they say, no, it's $4, right? But they don't tell you it's now 280 grams. Right, so in other words, they're giving you the same product, but they're not giving you as much, right? But you still look at it and go, oh, Doritos are still $4. Cool. And it's like, yeah, but there's 30% less Doritos.
Yeah.
Or they increase it by 20% and reduce the amount.
Yes. They could do both.
Double whammy.
So
or you can not give a shit like chocolate people and just double the price.
So is there...
Talking about like Cadbury and...
Evil coffee people.
So is there like a final statement on the debasement piece that people are commonly getting wrong?
Generally, all I'm saying is you hear a lot about debasement, but you should counterbalance that with, okay, but what's productivity, right? But the valid point is, and you just mentioned it before by saying, yeah, but housing's 14 times income. And it's like, yeah, but that's not really about debasement. That's really about just the explosion in lending, right?
Got it.
That's really what it's about.
Interesting. All right.
Sure.
That's good.
All right. I think let's finish on the lesson from history. New eras. You're going to give us those nuggets.
Well,
Chicken nuggets.
Are we there yet?
Are we there yet? Can I just read this quote? Speculative market expansions have often been associated with popular perceptions that the future is brighter or less uncertain than it was in the past. The term new era has periodically been used to describe these times. That's a quote from Schiller, right? And what he's saying is what we were talking about before, okay?
So you've got Google search trends here.
Yes.
These are the charts, right?
Yes. Yeah. So one way Schiller does it to see when did things start going a little bit nutty is he goes into Google Trends and types in the word, right? So I typed in artificial intelligence. As you can see, the climb has been pretty steady over about the last, what did I do?
From 2020.
Yeah, 5 years, right? So it's gone from 25 to now 100. So in other words, it's exploded, right?
Not as sharply as large language models.
Okay, now, large language models are also associated with AI, but look at the history for it. What did I make a joke there?
Large language bottles. Just got me. He got me.
Yeah,
Sorry.
just keep drinking the wine.
Too many
mate.
bottles.
Yeah.
Large language bottles.
100 green bottles.
No.
Now, the point is, look at large language models. Nothing happens, and then April it just explodes.
Yeah.
Right? Now, go and have a look at NVIDIA's share price.
From around then as well.
Well, April 2023, I think it is. And you will see that NVIDIA's share price nearly copies that rise.
Well,
Right?
do you think this is based off the success NVIDIA was having?
Well, no, what I'm saying is when you search the trends artificial intelligence, the other thing that, there's like large language models, right? There's artificial general intelligence, right? When you see the trend, what you see is large language models I can guarantee you 95% of people would probably go, what's a large language model, right? I'm going to search it. Now, what happens is NVIDIA's price starts rising and people start going, what do? Oh, they do chips. And what for? Oh, for AI. And what are AI? Oh, large language models. And people go, oh, what's a large language model? Oh, I better go and have a look at that, right? And so what I'm trying to show there is there's a really strong correlation between the explosion in large language models and people searching that and NVIDIA's stock price, right?
Yep.
And so that's why I'm saying this is really rhyming with what's went on in the dot-com bubble.
Or if Google exists in the tulip era, you'd have tulips
Exactly.
going through the roof.
Perfect.
So it's just about looking at, like Schiller says that we're look for the new eras, look for the speculative shiny objects.
Yes.
And that tells you we're kind of at a bubble top, or we're
Yes.
getting a bit frothy.
And he's saying, how do you find out if people are going nuts? Well, you look at the internet and go, hey, everybody's searching large language models.
Yeah.
That gives you an idea, right?
Yeah. Cool. All right.
Righto.
Done.
Questions? We're going to slip in a question?
We've got a question.
We've got a bit
We've
long.
got a couple of comments.
We're at the 40-minute mark.
Well, if you're still here, thank you.
Yeah.
Thank you so much. And everyone who's been liking, commenting on Spotify, thank you.
Yeah, the ones who argue, get lost. We don't want you.
I like that. I like an argument. Anyway, no more questions. See you next week, people.
Cheers, folks.
Thanks.
As always, remember, we don't provide financial advice.